Okay, I was sorry about the glitch. All right, and I was recording and I was thinking it was still going without knowing that it actually paused. All right, so so back to what I was saying. All right, so you can see this is actually the 1 a.m., 5 a.m., 9 a.m. This is a basic. All right, this is a basic. All right, this thing fundamental, like a beginner can utilize on this, and this kind of model can actually change a beginner's lifestyle. That is number one. Now there are different kind of 159 models. All right, different kind of 159 models, but like I said, another thing is SMT. Okay, let's just say for example this was actually euro USD. For example, this is actually euro USD, and you can come and say, okay, this one is euro. All right, let's take another one for, let's just say pairing of pairs is actually GU. So let's just say for example this is actually GU, still the same 159. All right, this time around we are going to look at the SMT. All right, we are looking at the SMT this thing value. So this is 5, I mean, GU. All right, and we had a key level. Let's just say we had a key level around here, and price might just let's just say do something like, sorry for not talking, actually just trying to figure out something. All right, just this might actually be the key level. All right, and something like this, I think key level something, key level, key level. All right, okay, let's just say this can actually happen. Then get another box and another box. Sorry. Let me make this to be done with. Please forgive my drawings. Actually, I'm not that good at drawing, but I just want to just emphasize on something. All right. So it is actually around this key level area that I'm actually looking at. All right. I'll just do this. This is not actually correct. This is not actually correct for real. This one, DGU, is not actually correct. But I'm going to give you just use something like a diagram. Okay, let's just say for example, all right, we have let's just say we have Euro USD. Let's just say Euro USD around here. Let's just say Euro USD. And there are times whereby we can see something like this. All right. Okay, we are expecting by price came into this point before going back. All right, and let's just say the key level was maybe fair value gap, for example, and then we can see something like an SMT from one swing high to another. Let's just say the SMT will be high like this, for example. All right, and then SMT, yes. Sorry about that. SMT test. All right, SMT, and for GU, all right, which is GBP USD. All right, we'll be the same thing. We are still also looking for buys because of it's also pairing of pairs. Yeah. And still same key level. All right. But this time around it is actually kind of like different. All right. The SMT is just like this. All right. The SMT is just like this. This is how the SMT is. Okay. Now these two are the same thing. Let me just say, in terms of pairing of pairs. Like, why do we call it pairing of pairs? Why is it needed? Why it's actually needed is for us to actually know which one is actually going to be better than the other. All right, which one is going to be better than the other? Okay, let's just do this for EU and for GU actually. All right, and I'm coming and make sure that this is going to be like this, something like this. And the SMT might actually be this key level around this area. Okay, and buy side liquidity around there. Let's just say, and for that one, let's say buy side around there too. Now these are two different SMT, mind you. Okay, we have found our this thing, all right, and let's just say we are using this kind of formation. All right, let's just say this was EU. You can actually say, okay, this is a turtle soup, good and fine. This can also be an SMT, all right, around here. This is what I actually mean, an SMT. All right, this is what I actually mean. Now, for let's just say, for example, it has come into this key level, we have an SMT. For others, it might actually be yes. I think I've gotten the thing I've actually wanted, which is okay. I hope I'm right. Coming to the key level, that one, and two coming together, something like that. Please, sorry for making this video boring actually, but I know that I will actually lead to something. I'll actually like have something to tell, and let's just say this is actually something like the key level. I think this this is that or this one. Something like this. Okay. What I mean is so that the SMT might actually be that high. All right. That's what I'm trying to actually tell you. All right, something like this. But we are still going to look at it and then we are still going to find out what I'm trying to say, all the kind of nonsense, all the jargons I've been saying right here. So I don't want to make this video long so that the more the video is long, the more boring it gets. But this is what I mean right here. All right. So number one is this SMT is high. All right, it's moving in an uptrend. This one is moving in a downtrend. Now, an uptrend SMT means that price is actually going to react to the opposing this thing liquidity faster than this one. All right, this one might actually take a day. This one might actually take um a day and all right before it can actually hit the buy side liquidity. That's one thing about it. All right, this one can actually even take a day. This is the buy side liquidity around here. Break the buy side liquidity, continue moving higher. Then before this one have already start moving higher, this one might actually be around maybe this side. All right, the GG might be around this area before it might actually get here and before it might actually push up. All right, EU already retraced, all right, retrace again and continue moving higher, all right, because of the SMT. So the higher time frame, like this is the 4 hours, all right. So I hope with this few point of mine, I've made a clear this thing, all right, about SMT. So SMT are actually formed where key levels are. For some persons, it might be important. For some persons, it might not. All right, but just know that is what I actually try to mean by SMT. All right, in terms of pairing of pairs, Euro USD, GBP USD, gold, silver, Bitcoin, Ethereum, yes. What else again? Um, I think that is that. All right, I think that is that. AUD, yes, AUD NZD. All right, AUD USD NZD USD. All these kind of things you can actually use them as pairing of pairs. So you want to be looking at where how which one actually has a lower trend SMT, all right, or a higher trend SMT. Anyone that has a higher trend SMT, then you take that one. But this is a beginners, all right, friendly basic model of the 159 trading model. This is what some persons are expecting. But mind you, what I said in the previous this video, whereby um it can actually just, let me just say, respect if maybe a fair value gap, then go continue moving back down. All right, and then maybe this key level that you're looking at is not actually the main key level. Maybe there's another key level and another higher time frame which price need to actually meet before it can still go back up. But this key level you posted is not the right one. So that is how. So just follow this rule of thumb which I've actually placed here. What is your higher time frame buyers? Weekly bullish. All right, so we are going to do something right here. I think that is on this thing, on yeah, on this guy. So number one, um we have been seeing that, okay, yes, we are actually in an uptrend on Nasdaq. All right, uptrend on the Nasdaq. So but mind you, note that every candle, all right, like if you see this one and this other one, you find out that, okay, it's actually past. All right, let me just say they are all 1 week candles and 1 week trade. So instead of you to go on a daily time frame and come and pick out this candle, come and start saying you want to come and back test everything, you can just go on the weekly time frame and then do the most important thing. Now on this, all right, we have seen this one. All right, number one, my buy side liquidity, and buy side liquidity, and we have this. All right, so number one, last week closed with bullish candle. This bullish candle was what price actually closed with, and then later on price actually hit that and then start coming back down. All right, now coming back down, so maybe for next week we can come and see something like, maybe we can see something like this. All right, as good as that. All right, so we had this, and another thing we had was, yes, this other block, I know price, this one might actually hit it, but that is also another point. But the most what price was after, which was this week, what price was after was this swing high. That was what price was after. This swing high was what price was after. All right, this swing high when price took it. Now looking at this kind of stuff, we are finding out, we are seeing something like a consolidation. All right, which price is actually trying to come and start telling us that he want to actually sell off, like he want to actually try to sell off. All right, so it's just like something like consolidating. I'll just put it that way. All right, this area is just like a consolidation phase we are having on this weekly time frame on Nasdaq. All right, but this was what happened. Price came in here, closed last week with a bullish this thing formation, then couldn't find, took that buy side before the dump. As simple as that. All right, see how this one was. All right, this one just behaved like this one, whereby the other last week was bullish, price went up higher. All right, took out this buy side liquidity, not this one. All right, took out this buy side liquidity. When he took it, then he stayed dumping, then came back down. All right, then targeted this other swing. Now there was something I posted on my video. I said market does four things. All right, number one, create liquidity. That is the number one thing price does. All right, now what do you mean by create liquidity? Number one, this liquidity has been created. All right, price need to come and rebalance inefficiency, equilibrium. So you have to come and be like, okay, good and find equilibrium. All right, I'll still talk about that fib of his stuff and all that kind of stuff. All right, now I know this might actually not be making sense for some persons, but you can come and start saying, okay, from this swing high to this other swing high, this swing high to this swing high we have here. All right, you see price came into the 50%, which is the equilibrium level. All right, it has taken out inefficiency, all this key liquidity and all this kind of stuff. All right, then before going back, all right, but you didn't go back to the buy side. All right, so when price did that, then good and fine. Okay, so now the next thing we have is this. Now we have seen that price actually creates liquidity. All right, rebalance inefficiency, rebalance equilibrium, and then hunt that liquidity. It has hunt that liquidity it created. All right, but you didn't hunt this one, but you hunted this one. All right, you took it out and then move. Now you now come and start saying that this other liquidity was created. Mind you, when this liquidity was created, this one has not been created, but this one has already been created. All right, price now came. Now let's just say, for example, now we have, let me just say, the buyers now actually changed, like the whole model of the buyer changed to a buy. You find out that this liquidity that has been created is going to be what is going to be hunted again. All right, when buyers step in, this liquidity is what is going to be taken. So that's how it is. All right, I think I've made myself clear. We can take some examples right here. Mind you, all these things are swing low, and this thing, all these things are liquidity, sorry, liquidity, all these weeks here are liquidity. So let's just say, for example, okay, we had a buy, good. All right, this was the target. You created this liquidity. Mind you, before all these things were being created, and all this price formed, this market has already created this liquidity. All right, now since we are actually looking for buys, we can actually take this as our buy side liquidity. Let's just say you cut an entry around this area and then you hold it. All right, buy side TP. All right, as simple as that. Okay, so that is how it is. Same thing right here. All right, buy side. All right, as simple as that. Let's just say a sell, you took the sell, maybe this side, this liquidity right here. All right, good and fine, something like that. All right, so that's what you need to know. Market, actually the market doesn't is not actually something that moves like this. All right, it must go, come back. All right, go, come back, all that kind of stuff. All right, as simple as that. So cancel and delete. So that's what I actually meant. Now, so now we are looking at this. Okay, back to what I'm trying to say. All right, so last week, all right, don't look at too much data. Don't look at too much data on the weekly time frame. Don't look at too much data. Just select the past. Let me just say now, like let me just say we are going to enter, next week is going to be a new week. All right, just focus on these two. Just like this other one, I focus on these two. That's what gave me the result of this one. Just focus on these two. When you focus on these two, you don't need much. Focus on these two. Then it can actually tell you what is actually going to happen. Then you can look at what the lower time frame is actually saying. Maybe when you look at the lower time frame can tell you that price might still move up. Who knows? Or price might still come down. Who knows? All right. So that is it. So now we had this. All right. Now back to the 4 hours. Sorry. Let's look at what the story is going to tell us. Now you now come and start saying that okay, now that 4 hours, let's have that Sunday. That was Sunday. This was that Sunday. All right. Sunday we can see price coming into this fair value gap 50%, mind you. All right, equilibrium. All right, first thing first, the market did that. Market created liquidity. All right, this was the liquidity. All right, when price created that liquidity, price had to come and take inefficiency equilibrium, which price actually have done. All right, mind you, 50%, you can look at it, 50% swing low to the other swing low, 50%. When price came into that point, took it, good and fine. All right, now, so let's just say, for example, this is not, I don't think this is actually a 159 model. Okay, this is okay. Now, normal sweet 159 model. All right, you can look at 159 model, 159. Now there's something fishy about this 159. Unlike this other one, there are different kind of 159 models, but I'm saying that a beginner can utilize this kind of 159 model. All right, a beginner can actually utilize this 159 model. And there was something else I actually said, or another thing, there was another thing I actually said. There are times it might actually close with a bearish candle, all right, and then it will still like sell off. All right, so you need to actually know your bias. Now, our bias, these have actually showed us that we should be looking for buys, not sells. That's number one. All right, entry to the key level is around this area, which price has already showed us. Down, we can look at 1 5 came into that model, this thing, all right, and then start moving. Now zoom into this candle. All right, most of the time we all don't understand that the secret about trading is actually resting on the candles. All right, we need to be studying, you need to study the candles. Now you can take this, you some persons might say this is an SMT, good and fine, and then they will be like, okay, let's place a buy. And when they will place a buy, they'll go and be like, okay, let's place a buy around there, something like that, towards this point to say, or this normal buy side, actually wait, this normal buy side right here, which is around here. good. All right, take this buy side and then keep maybe stop loss around somewhere here. All right, you still get stopped out. All right, this is another kind of 159 model, but mind you, just stick with if like for a beginner. All right, if you see this kind of stuff, all right, if you want to take the trade, you can still take the trade, but this kind of things must happen. All right, but now mind you, this SMT is wrong. That's what I want to try and tell you. Yes, it came to a key level. Yes, it's wrong. Why? Because of we still had a manipulation around here. You had the manipulation. All right, you had the manipulation around here, and now that actually come and tells us that okay, since we have this kind of manipulation, this is the SMT we are looking at. This is the SMT low we are actually looking at. All right, good and fine. SMT low we are actually looking at. So now, pairing of pairs, you can actually pair it with the US 30 and S&P 500. Okay, let's look at S&P 500 on a weekly. Let's just say on a um weekly. Okay, this was the weekly time frame. All right, number one, weekly. We had this. All right, somebody can still take this as buy side. All right, now let's just see what happened on the 4 hours. 4 hours. That is that Sunday. Okay, good. That Sunday, price came into the fair value gap. You can see our price came into this fair value gap around here, around this area. All right, this is 2:10 right p.m. All right, 6. Okay, yeah, 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 correct, correct. Sometimes it's actually I think that is on Monday. Yes, the times is actually close together, but let's forget about that. We are looking at the SMT now. You can come and start saying, okay, good and fine, we had this. All right, now this is the SMT we are looking at. All right, because of this was the thing. There was no other manipulation. All right, this was the only this thing. So we can actually take this one as the SMT. All right, right here. You can actually take this one as the SMT. Then that of Nasdaq. All right, this is actually the SMT. All right, you can't come and say okay, SMT is this one, something like that. It sounds kind of weird. All right, then let's look at YM. I think YM, if YM is actually going to still let's look at YM weekly. Okay, okay. YM did the opposite. All right, YM did the opposite. Nothing to trade on the YM. 4 hours. No, 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 nothing to trade on the YM. All right, that's one thing I don't like about pairing pairs with the YM, which is I think US 30. Nice. Yes, US 30 and 1 week. Knew it. The same thing. All right. So that's why I don't like doing it because of this guy always does the opposite most of the time. Sometimes others are bullish, the rest are he's actually bearish. When they are bearish, he's bullish. That's one thing about this guy. He's just like trying to behave like I don't know what if I would say like a prodigal son among all his brothers. All right, but most persons actually use this trait. All right, in terms of pairing of pairs, but I choose NAS 100, which is US 100 and S&P 500. All right, so that is that we can see that there was some kind of dramas there, but down to NAS. All right, NAS 100, we can come and start saying that we had that. All right, that is our buy side, but good and fine. 4 hours. 4 hours. Now, that is that. Okay, so we are done with this one. You can actually hold the buy towards this point, good and fine, hit TP, great. Or you can still maybe look at, I don't know, this point or this area, whatever. I don't think which price actually came into. Remove, thank you. So now this is the 159 model. This is 159 model. All right, 159 model. There's another manipulation around here. All right, 159 model. We can actually see the movement around here. So you can see we also have the PM. Now the PM. We had this manipulation right here, all right. Then during the five price, I don't think that there's much movement around here. There was no much movement around it. Then nine came again towards this point. Then another 1 a.m. All right, 1 a.m. five nine. You can come and start saying that it was this nine that actually came deep. This PM one that actually came deep. All right, before you can come and start seeing some kind of movement towards this other buy side before the sell side. Now we can look at this. This is also another this thing matter we need to address. We have the three candles, all right, 159 model, which we have actually touched on. One, two, three. We also have the two. Now these two actually comes in whereby the five and the one follow one sequence. Mind you, you know your bias. Your bias is bullish, but sometimes it follows the sequence. Sometimes this might actually be one. I'm just using this nine. All right, sometimes this might actually be 1 a.m. Then this might actually be 5 a.m. I think it happened this week. All right, 1 a.m., 5 a.m., and then the nine will not actually sweep. What the nine is after is only to maybe take out that five low. All right, before which also happened here, just take out that five low and then move. All right, so that is it. And there are some persons whereby they might actually say, okay, since we 1 o'clock manipulated the 9 o'clock, then let's take a sell. All right, they will not come and try to take a sell. Now that sell, they will not come and turn into liquidity without actually knowing that the bias is actually bullish. They will not come and turn into liquidity. Now we are come and start looking at this. Now this is 1 a.m. All right, this is five. Now this five, now there's something some persons need to understand. All right. Sometimes when this kind of things happen is during high impact news. All right. During high impact news, that's when you need to be taking this kind of things seriously. For real. So during high impact news, let's just say this might actually be five. All right. Mind you, I do say 5 o'clock is always a trap sometimes. 5 o'clock is always a trap sometimes. This might be bullish. It might actually encourage you to start buying because of, oh, the bias is actually bullish. All right. Without knowing that maybe price have not even coming to a key level. And then you now come and start saying there are going to be one nine will actually and most of the time not actually nine. 10 might actually just do something like this. Mind you, like I said, each candle is an open high low close. All right. So on the 4 hour time frame, we have this 1 a.m. This 1 a.m. contain 1 hour 1 a.m. 2, 3, 4. Now you now come and start saying that one is actually the opening. Two can be the manipulation, three can be the distribution, four can be the close. All right. So each candle is just like that. A normal candle, that is how it actually forms. All right. So don't actually come and start being like, all right, to having too much thought upon thought. So now you can come and start saying that the five, all right, can do be like this, and then let me just say instead of it, and you will not be like, okay, I'm bullish on this. All right. I'm bullish on this. I'm bullish on this. The five actually give me a bullish sign. It closed above. Look at this one now. Some persons will come and say it closed above. And then just for them to come and enter, yes, surely 9 o'clock will actually give you that kind of sweet encouragement because of that is the opening. Is that opening that actually creates the low. All right. Let's just say um 10. All right. Do this. Yes. 9 o'clock will actually open. Let's just say it will actually open. This week has not been formed. Overlook this week. This week have not been formed. You now come and start saying it will open and then go. All right. Maybe reach a certain key level or take out this. Let's just say take out sometimes. Most of the time, you actually take out liquidity. That's what the thing does. All right. When it goes, it actually comes to that liquidity. All right. When it comes to that liquidity around this 5 a.m. high. All right. When it comes there, it will now manipulate that this thing and then bounce down. All right, that's why we do have that this thing too. All right, so for some persons, you can actually do whatever you want to do here. All right, but make sure that your TP will be that point. But mind you, sometimes it might actually do that. You are not on profit. You are actually in liquidity. Take you all out, and then come back down. And sometimes whenever I do come back down, it come back down aggressively. Like that's how the thing does. All right, you just see the market instead of the market to just be like normal this thing whereby it will just be moving up, down, go something like this, go up, something like that, stuff like that. So if you do look at the market, if you watch the market, all right, you just see what the market during that news period, what you just see is the market doing something like coming back down, coming back down, coming back down. That's how the market is actually actually does these things. So as simple as that. So we have this kind of model. Sometimes the 1 a.m. is not actually that noticeable. But my own advice for some persons is make sure that you be trading each candle time. What I mean by trading each candle time, when you can trade each candle time very, very well, good and fine, it's actually going to help you a long way. So now, mind you, we are looking for bullish, all right. You can come and start seeing. Another thing that actually give me an encouragement is also the opening price of the week and the closing price. Yes, opening price of the week and the opening price of the day. All right, I'll not dwell on that one. That one's for my students. So now you can come and start saying this was Sunday. All right, this is actually Sunday. All right, bullish. All right, you can come and start saying price order flow was coming back down. Came back down. Key liquidity, fair value gap, good and fine. This equal low around this area. Sorry, all right, around this area. Then as simple as that. All right. So that fair value gap, good and fine, sitting, and then still moving up higher. All right, as simple as that. Now you can still use time. All right, time can actually tell you the most, the story about a whole lot of things. And when you can come and start seeing more of volatility is during that kind of nine do carry volatility, because of that is during the New York section. You can come and look at it here. Nine, you can see most of the major candles that we do see is are actually around that nine. You can see it here. Nine, that's where all these kind of fools actually comes in. Nine, all right, they actually just pump the market with big volatility. Number one, look at this other one that I was saying. All right, number one is this. Okay, good and fine. We had this 5 p.m. Okay, this was 1 p.m. All right. Then it dropped down. This is 9. You took a buy. All right. Buy. Good. Fine. Because of you said your bias was actually bullish. All right. You took a buy. Then just for price to actually just reach this point. Mind you, this is actually another block. All right. The last candle before the next candle. All right. A different kind of candle is actually another block. All right. This is also another block, mind you. All right, if we are looking at this, this is also part of another block. Yeah, but it's not something I'll come and dwell on. This is also another other block before this bullish one. So it's not something I'll actually dwell on for now. All right, most persons just teach you guys nonsense whenever it comes to other blocks. So this is actually part of an other block. All right, and now you can come and start saying what happened. What happened here was we can see um we all can see what happened on the sorry, top type, sorry, coming. Okay, so I'm back right now. Okay, so now you can come and start saying that we had this all right other block right here, which you now come and start saying price came into that point. Number one is look at this 1 a.m. All right, five. Five didn't actually do anything. All right, five didn't actually move up higher. For us to come and be like, okay, good and fine, that means that there's something cooking. All right, because of if you understand one thing about the candle, you find out that okay, if this is 1 a.m., all right, and five actually, let me just say move up higher, then maybe nine can actually try to rebalance and then move up higher, or price might actually do something like the opposite, maybe just rebalance just for that day. Now you now come and start saying, okay, sell sign has already come in. Now what is the next thing? Price came into that point, then took out this thing, this stuff. Now I know for some persons to come and be like, okay, you have not talked about entering. Now let's I don't know, okay, let's use this data, all right, as an entry. All right, now this is your our key level, all right, 4 hours. Now mind you, I told you whenever it is now our key level, next thing you need to do is jump down to the 15-minute time frame. All right, I think I need to make sure that I take it back to the 4 hours, clear my chart so that is actually going to be um that is going to be the only thing we'll be seeing. um Remove this one. I think there's nothing else I should. Okay, 15-minute time frame. All right, okay, good and fine. Now we have this key level. Let's just say we had this key level. Mind you, our entering is going to be around that key level. This was the other block period. All right, and this has happened on what happened? No, this is actually wrong. Sorry. Highlight this and then do this. So it's going to be very easy for me to identify on the 15-minute time frame. Shut up. Okay, good and fine. Okay, good and fine, exactly. Thank you. Now we had this. All right, remove this other block. All right here. Now you now come and start say that okay, good and fine. Since we had that, you can come and start say that there's not much buying pressure right here. Then around that kind of nine. Now you find out that on the lower time frame, if you drop lower, okay, this is sorry, sorry. If you drop lower, you see that that is going to be around that kind of 9:30. Look at it here, right here, because of that 9 o'clock is like the opening. All right, 9:30 to 10 p.m. or 9:30 to a.m. to 10 a.m. Listen, 9:30 to 10 a.m. can actually become the manipulation and then distribution at the same time. So we had this other block around here. This was our point of interest. Like that is where we are looking for entrance. All right. Now you can actually set your sell limit around that area. All right. Set your sell limit around that area, and then let me just say around this area or just at that point. Then your stop loss just look for the next swing high. All right. When you look for the next swing high, then you now target the low. All right. Target the low of the next this thing. That's simple liquidity. Now you now come and start see that this is actually 1:14 risk to reward. But when you actually dive lower, like more lower, like let me just say 1 minute, this thing, your win rate is actually going to increase. Your win rate is actually going to increase. But mind you, don't be greedy. Appreciate the little ones you have. Now, for some persons, if you want to go with 1:3, good and fine. If you want to go with 1:4, good and fine. 1:5, good and fine. All right. 1:6, good and fine. Don't overcomplicate things for yourself. All right. Now, if you just 1:6, you're good to go. All right, something like this. You're okay. You don't want to catch the whole lot. The only thing, like I said, the only thing that will make you rich is not your risk to reward. It's actually your lot size. All right, it's not 0.01. I mean, it's not 1:50. This thing. All right, that is not. And when you get that 1:50, what you come and do is you end up using 0.01. It doesn't actually make any sense. So that is the most important thing. All right. So as simple as that. So yeah, I think I've made myself clear. We can still find another entering that is on the 4 hours again. All right. Let's still use key levels. I've no. Okay, thank you. You all should be back. Let's use another key level. Another key level. I'm going to use another key level. Let me just remove all this. All right. Now we had this one. 1 a.m. 5. It didn't close above. All right, sell off. As simple as that. This was what happened on. I think I caught this trade on a Thursday. Yes, on a Thursday. This one I actually wanted to get it, but um um my profit margin actually stopped me out before the move. Actually, okay, because of I was holding the sell. Right, but this thing actually stopped me out. I had one right here. This I placed a trade. All right, margin stopped me out, and the second trade was at this point here. So, but pricing actually come there, didn't make this to soup this area. Then it just dump. So, how did I do that? Now you now come and start saying, okay, number one is this. We had this 159. All right, 159. All right, didn't close above. All right, it didn't close above. Now you can still see. Sorry, you can still see. Okay, it didn't close above. As simple as that. Buyers are not actually that strong. Now, what we need to be looking at, what are we looking, what is this thing? What is our plan? Our plan is, since price didn't actually close above with a bullish candle, but actually closed with this kind of candle. All right. Now we need to actually look at the lower time frame. What is the lower time frame trying to tell us? That is the most important thing. Now you now come and start finding out that buyers are not actually that strong. All right, like they are not showing that kind of strong sign. Oh, that is because of they are not actually at a key distance at a key time. Yes, good and fine. Yes, that is that. But the only thing there is this. All right, if you look at it, all right, if you study time very well, you come and start finding out that what is your most important thing you're looking at is not actually what is happening in price. All right, just the opening price is number one. No, number one thing is for you to mark out your opening price. That opening price, that is sorry, Sorry. New York Standard Time, yes, and use 24 format so that I can get what I'm looking for very fast. So that is 0.00. Thank you. Where is it? Where are you? Where are you? All right. All right. Now you can come and start saying that the algorithm state that okay, if price actually move up higher during that opening price, that's actually showing you a sign of price being bought overbought. And there was a statement I made in my community that this thing whenever you want to sell, buy sell the high, buy the low. All right. Sell the high, buy the low. All right. So that is number one thing. Sell the high, buy the low. And then when you now come and start saying, okay, what's the next thing? We have this opening volume imbalance, all right here, key liquidity, which price actually tapped in before actually dropping. All right, that is number one thing. Now that is actually a this thing, a PD ray. All right. Now you now come and start say that now we have seen that kind of a stuff. Now the most important thing we need to be looking at is what that 9:30 is actually doing. Sometimes, like I said, 9:30 can become the manipulation. This is 9 o'clock. All right, this is 8:30, 9 o'clock. 9 o'clock has already manipulated. Okay, good and fine. All right, he has done the magic by giving us that opening. All right, and that low. All right, then you can come and start see that 9:30. Then we still see that dump at that 9:30 period. You can come and start seeing that dump around that 9:30 period, which you can now come and start taking that sell. And I took that sell directly from this area. From this area, that's how I actually got that trade. All right, because of one volume imbalance. When I saw that volume imbalance, all right, then I just had to put my stop loss on the 50%. All right, at the 50% entry. All right, and that um 1 a.m. high, that 1 a.m. this thing high. All right, that was where I kept my entering, and exactly to that point, and then I had to come and start targeting that on the 4 hours. I was targeting that not 4 hours. Yes, I was targeting this fair value gap area. I was not actually targeting the 50% of that fair value gap, but this key liquidity around here. That's what my target. That was my target on that Thursday. That was my target on that Thursday. Back to 50-minute time frame. That was my target on that Friday and on that Thursday. That key liquidity was the thing I was after, nothing else. That key liquidity. That was what I was after. That was what I was after all the whole time on that distance. So that's how I actually took the trade, and I think that is all. So I've showed you guys how I took the entries and all that kind of stuff. You can still make another example. I've played everything out. Let's just use GPP USD 4 hour time frame and try to make sure that we clear everything. Okay, nice, good, nice. Weekly time frame. Let's see what the weekly time frame have to tell us. Okay, we had that. All right. Number one, I was thinking bias is actually bearish, and the bias was actually bearish for real. All right. So I was looking at this other block around here, which I know which letter price didn't actually hit. I don't know about this thing that of this guy, which yes, it actually hit, but this candle is so fucked up actually. So GU, I took the GU is actually better than EU. Why is this thing GU actually better than EU? See the SMT. The SMT is high when the bias is actually bearish. All right, the SMT is high on that on this thing EU, and then the SMT on GU. All right, is actually lower. All right, you can see that. That is the evidence. That's the evidence right there, right there. So good and fine. Now we had that as simple as that. That this was my this thing um my thoughts actually for the buys and all that kind of stuff. So and when you look at I made a post. All right. I said number one thing is what I was looking at was price to come into this place, reject this point, or come into this fair value gap area, all right, around this fair value gap area, all right. But since we are here, what price had to do was just I will just take this as I'll just call it maybe a rejection block, something like that. That's what I'll actually call it. But still, this is still like that 5 a.m. to 9 a.m. candle too. All right, as simple as that. All right, that rejection around there. So for some persons, you can go and learn about this kind of stuff. Like how can you capture on this? How can you utilize on this? Mind you, number one, find your bias. When you find your bias, your overall bias is bearish. Okay, good and fine. Then that means that you need to be knowing that every buy in a sell bias is actually showing you an entry sign. That is number one. Every sell in a buy is actually trying to show you an entry form. So now you're not going to be like, okay, good and fine. Previous day high, previous day low for some persons. All right, this is it. As simple as that. So now we are not looking at the daily much actually. All right, now is that 4 hour time frame, and we are using time. All right, now so let's start off. Number one, we have um back to my settings so that it's still going to be simple for some persons. All right, 12 hours. That's number one. Now we had this. All right, what is this? This is 9. This was 1 a.m. and 5, and then 9 again. Like I told you, most of the big candles, all right, actually happens on around that 9. I took okay, it was this one I actually took the trade on. All right, now you're not going to start seeing that for some persons now they will actually be like, okay, what actually happened right here? That's why I said understand candlesticks. Like you can pick one candlestick and understand it. Now let's just use the power of open, high, low, close. All right, I think for bullish it is open, low, high, close. All right, open, low, high, close. And let's use this. All right, this was the opening. All right, this was the low, which was this. All right, which this was the low, and this was the high. All right, now it got into the high. The close now became massive. The close became massive. Let's just say it stopped at a midpoint right here. And now when you come and start looking at this candle, all right, you come and find out that maybe there was a PD ray around this area, which price came in, respected that point, all right. And mind you, 9:30 and all that kind of shit, all right, dump. Now dump to where you come and start saying, bro, we had a whole lot of liquidity right here. All right. So you can actually come and take this other block around here. This other block around here as your TP point. This other block around here as your TP point. Good and fine. Bam. You're done for the day. All right. So let's utilize this. Let's utilize this. All right. And this is AM 5 AM. Now this time around, pricing actually take that high. All right. It didn't take the high. All right. But the candle tells the story. That's one thing I do tell some persons. Allow the candles to close. Now down to 15-minute time frame. Let's see what this guy is trying to tell us. Like I said, all right, price has formed something like a fair value gap, something like that. All right, as simple as that. Okay. So now good and fine. And what else? What else? What are we looking at? Opening price. No, opening price for the day. That is actually on Thursday. All right. Opening price of now. Sorry. Opening price for the day is 0.00. Okay, let's do that. Let's do that. This is Thursday. Thursday, Wednesday. Yes. Let's look at. Was it this? Was it that? All right. Good and fine. That is number one. That is number one. Back to my distance for some persons. All right. But I actually love using 24 hours. It's very very simple. Using this is kind of weird. Feeling weird for real. All right, now this was a trade. This thing, okay, the close that showed us sell sign. All right, sell sign. Now you can actually take this trade during that morning period of time. That morning period of time. Let's just say, let's look at how 1 a.m. is actually gonna do this thing. Okay, that is 12 a.m. 1 a.m. 1 a.m. 1 a.m. Ash, I can't do this kind of stuff, all right. But just come into this fair value gap and then stay dumping, and then you can come and start looking at these ones, all right. Came into this rejection block and also this other block right here, all right. This other block right here, all right, and then dump. You can actually hold the sell. You can actually take the short. All right, but sometimes you need to make sure that you are trading at a key time. That's one thing about me. I don't because I've learned a whole lot of things whereby yes, sometimes 8 o'clock 8 a.m. might give you good price action. one can actually, yes, there are some times whereby it will give you a good price action whereby you can hold it and it will continue, whereby that nine will actually rebalance and then continue. Yes, good, true, that one is that. But there are times whereby this thing have fucked me up to the extent that there are times you trade eight, nine will actually take you out and then still go back to your direction. That is so annoying. All right, so it's better you should actually trade at the key time. So that key time, all right, you're looking at is 9 o'clock. All right, you need to be looking at that 9 o'clock. You have to mark that 9 o'clock and 9:30. What you want to do is, what you want to see is rejection within these two times. Within these two times, you want to be seeing rejections. All right, as simple as that. Within these two times, you want to be seeing rejection. All right, this is 9, this is 9:30, 9:40 something. You want to be seeing rejection. All right, so I don't want to make my chart to look very, very detailed. That is something I don't want to do. All right, but I'll explain with my mouth actually. So now this is fine. Five. All right, 5159. The opening. All right, you will now come and start saying came towards this other block period and then boom, sold off. All right, came into this rejection block, that is 9:45. Came into that rejection block. Instead of respecting this bad boy here, which is this fair value gap around here, I think it could have even respected this fair value gap right here, which from here, from this 4:30 actually, but just coming to this rejection block. All right, and then sold off to towards that this guy, which is sort of towards that other block which I actually showed you guys right here. That other block. All right, don't be greedy. Never be greedy whenever it comes to trading. All right, from there to there, I'm just actually trying to show you how you can actually use the 15 minutes as your entry models. All right, good and fine. Look for one PD rate to another PD rate down. Then your stop loss is going to be at swing high. All right, that swing high, you can just keep it at that other block entry, just at that other block right there. And then, but mind you, there are times whereby price might actually come into the 50% of the other block, but just the swing high is actually better. And then you hold the trade, then down. As simple as that. So I think that was what happened on Friday. Yes, on the Friday I took a trade on GPP USD too. On the Friday I took a trade on GPP USD, which was actually this yes, around this area. I think I'm on GPP. Yes, good and fine. I marked this out. Then five, good and fine. So what I had to do was the normal thing I'll be doing right here. So that's what I'll be doing. All right. So you don't need. There are times whereby the only time you can say, okay, you want to be cashing big movies. Maybe when you look at the monthly time frame, you can cash big move that are like, let me just say like this, something like that. You can cash big move. If you want to swing, you can actually do swinging. Yes, you can actually do swinging with this method. I'm trying to actually tell you right now. You can actually do that. All right. There are even things I can actually try and show you, but I don't want to make the videos too long. But one secret, all right, I've I've loved about trading is number one, and that is opening price. Now, in that opening price, with that opening price, it actually come and start telling me that, oh, if my bias for the day is aligning. That's one thing I love about the opening price. All right, let's just say if it's on Wednesday or on a Thursday, let's just say Thursday. All right, this is actually Thursday. All right, I'm looking for sales. I want to come and start seeing something that's actually going to give me that kind of improve, like he's going to come and tell me, okay, yes, surely that I'm actually on the right path. All right, good and fine, as simple as that. All right, this is also other block right here. All right, good and fine, I'm on the right path. All right, but that is it. And then the next thing you need to be looking at is that nine. All right, that 9 o'clock to 10, 9 o'clock to 10, because of this 9 is actually the opening. All right, this is the opening. All right, it has made that high. All right, and you can come and start seeing price came into that rejection block right here and then stayed moving just where, and this other block right here on the 4 hour time frame. All right, this other block right here on the 4 hour time frame, as simple as that. So that is it. Okay, so with this few point of mine, I've actually made something interesting for some person, so you can go back and backtest it. 159 model. Actually, I could have also tried it on gold, but my time. All right, we can try that on gold. Let's just say we can do that on gold. 159. Yes, sorry, no, that on gold. All right, yes. Sorry, I was thinking I was on the 4 hour time frame. You can look at it. Nine, then you can come and look at it. 1 5 manipulated that one and then move up higher. Actually, gold is still going to buy actually. For silver, I mean, it's actually going to buy. It's going to buy more towards this point, or towards back to the this thing all time highs. So as simple as that. Forget about all this shopping movement. There is how the algorithm actually works. You can come and start saying that that's how the algorithm actually works. You can come and start saying that it follows the same sequence. All right, look for a PD ray, this thing, a key level, mark that key level, go to a lower time frame, allow price to come into that key level, react to that key level at a time, at a specific time, 9 to 9:30, and then take your trade. As simple as that. Okay, so stay blessed. God bless.